Hello, it is Tuesday, the 19th of August, 2008, and this is Brian Shannon from AlphaTrends.net. The market closed here with a $1.38 loss on the S&P 500, or just about 1%. And, I was saying yesterday, it looks like the handwriting was on the wall for a break of this trend line, and that's what we did have occur today. The more times any type of support, whether it comes from a trend line, a moving average, or just traditional support level of buying, that is, the more times one of those levels is tested, the more likely it is to fail, and that's what we had in here today. In particular, when you have a counter trend move that comes up to a declining 50-day moving average. We've seen the market struggling with that 50-day moving average and struggling with this prior level of resistance near 129, but obviously the buyers have exerted their influence in this market and now are obviously back in control. Looking at the hourly time frame, we can see that trend line a little bit more clearly. What we had seen was this lower high that occurred. We've had a declining 5-day moving average, and that's why basically I thought the handwriting was on the wall, because we had the lower high, we have a declining 5-day moving average. The market closed right at this prior level of support, that is the higher low right here at 128 yesterday, but this morning we gapped down through that level. You can see that here more clearly on a 10-minute time frame, and then we continued to sell off, and it was actually pretty quiet after that initial sell-off. We had a little bit of a rally in here, then another sell-off, but it didn't take it to lower lows. I still think the market is vulnerable in here. Looking at the 1-minute time frame for today, you can see that it's struggled basically back and forth with that daily VWAP, never really getting more than about 30 cents away from it or so, which is pretty quiet actually. The big news, the thing that people are talking about is we're down on light volume. Well, the fact is that volume will tend to increase, like we saw in here, as the fear builds, and it is a seasonally slow time of year as far as overall trading activity goes. But the only thing that pays is price. Yeah, it's down on light volume, compared to the 20-day average and compared to what it's, done for most of the year. But the only thing that pays is price, and you can't justify holding a long position in the face of declining prices just because the volume, might not be what you expect it to on such a sell-off. So volume will tend to follow the trend, and next level of potential support, we're basically right here at these lows, and you can see that we are back below all these moving averages. We closed back below the 20 today, and let's just take a look at where these potential support levels are. Right here, we're testing this low right here, and below that we've got the next potential level of support in here. I think you've got to look at this as, again, now we've got all the trends aligned. We've got a weekly downtrend, we've got a daily downtrend, we've got a 30-minute, 10-minute, etc. So you've got to look at it as guilty till proven innocent, and that rallies in here should fail. It's not likely that we're going to get probably back up above 128.25 before we see lower lows again. And just to make the point again about the light volume, in 2006, big news was made of the rally in here occurring on light volume. You can see how the volume diminished all through August, September, October, but the market, it set off a real big rally. Low volume doesn't mean that a move cannot sustain itself. The only thing that pays is price, and we've got lower highs and lower lows, so you've got to be very careful with this market. The Russell 2000 was down $1.28, or 1.73%. This $75 to $76 level that we've been observing and focusing on the weekly and the daily time frame right here, again, has been acting as resistance in here now. We had a large uninterrupted move up to that level, so this sell-off shouldn't really be coming as a surprise. Perhaps we're going to run back down towards the 50-day moving average. But for now, what we saw in here today was that the trend line was broken in this market as well, and we had broken also to a lower low. We took out the low right here from August 13th, and that set the stage for continued lower prices. the level we've been focused on as the more important level of support is really 72 and a quarter to about 72 and a half. If the market can hold above that, then perhaps we're going to see more of a time correction. But if it can't hold that, then I think we're headed down towards about this 70 and a half or so, and that could really ruin the psychology of the market from the long players' standpoint once again. So you've got to be careful. Overall, we still remain in a very risky environment, a trader's environment. These financials continue to act terrible. We've got all these, we're back below all these moving averages. They're all declining. The market was unable to hold on to the bulk of these gains so far. If we take a look at, let's take a look at some Fibonacci off those levels, just to see where we are in relation to the lows from when this Fannie and Freddie news really hit hard. So we're at about 50% of that, and we're also at this important level here that we've been focusing on as far as potential support and an important level for this market, which is $19.75. We're down to that level, and if we get a little bit of a bounce, I would expect that maybe about 20 and a half would be resistance. Then you would, if it fails from 20 and a half, that would be a good place to look to get long the SKF or to sell short the XLF. But again, there's still a lot of headline risk in this group. That's what spurred the rally last time, is that the government got involved, said you can't sell short, we're going to buy these stocks back and that sort of thing. So just be aware that don't be complacent just because there's bad headlines and that sort of thing. Always play a strong defense. Oil was up $1.65 on this USO, still clearly in a downtrend, below the declining 10, 20, and 50-day moving averages. On the 30-minute time frame, you can see, let's just change the scaling so we can get a little bit better perspective, that we're chopping around in here near this 5-day moving average. I wouldn't suggest getting long in here. Looks like the market came up to about where you would have expected it to find resistance, because this prior support acted as resistance here. And then once again today, there really looks like no edge being involved in the oil right now. And as far as the Nasdaq 100 goes, we looked at this yesterday, said it looks like it was heading down towards the 200-day moving average at $47 a share. That's exactly where we closed today. You could see that we got below, I don't know, let me just, those are the levels I drew in yesterday. What I was looking for, as I said yesterday, ideally would have been for a continued a breakdown, and then a rally up towards that 5-day moving average, then a breakdown. That would have been the ideal scenario for this morning, making it easier to trust a move from the short side. For those who were involved in listening to the Twitter comments that I had, I was involved early on, made some money in there before I had to head out for an afternoon appointment, but it was really choppy in there during this period for the Qs today. But obviously we finished 1.25% lower than where we were yesterday. The market volume was about average for the last 20 days, and let's just take a look at that 30-minute time frame. So we saw that this prior level of support was broken, so we made a lower low in here, and that gives us reason for obvious concern. I think that we can look at this prior resistance here as well as having been tested, and at least for now successfully. But the bigger level of potential support is going to be down near this 46 level, and again, if 46 fails, then this market could have bigger troubles. We still do have a declining 50-day moving average, so you've got to be quick to take your profits on these long side trades when they present themselves.